Well, we've had an incredible surge in government spending. A lot of it related, of course, to COVID-19 and to the ordered, economic shutdown and the fact that a lot of people were no longer out there earning money. And so the government looked to replace what people were no longer earning by printing money, which is what they did. You had all this government spending, but there were no additional tax hikes to cover the cost, nor did the government try to prioritize any of its spending. It didn't say, well, maybe we should spend less on the military so we have more to spend on fighting the pandemic, right? They didn't budget their resources. They just said, well, we're just going to spend more money on the pandemic, but we're not going to spend less on anything else. And we're not going to raise anybody's taxes to pay for it. So where'd all the government spending come from? It doesn't come from, thin air. The money has to come from somewhere. And if they're not going to make room in the budget by cutting spending, if they're not going to increase taxes to get additional revenue, well, then they just crank up the printing presses. So that's where all this new money came from. The government printed it and spent it into circulation through all these programs.
So I think when most people hear that something like 40% of US dollars were printed in the last 12 months, they automatically think inflation. But we haven't seen a rise anywhere near 40% in prices for everyday goods. So where is the inflation? Your thoughts?
Well, first of all, by definition, it's that expansion of the money supply that is the inflation, right? That is what the essence of the word inflation is. It's to inflate, right? So when you have inflation, what is being inflated? Because the word inflate means to expand, right? You're blowing something up, you're expanding it, and prices don't expand. I mean, they can go up and they can go down, but they certainly don't expand. So what is it that's expanding? And that is the supply of money. That can be expanded. The Federal Reserve can expand the money supply and it can contract the money supply. A contraction of the money supply is deflation. So it is money supply that is being inflated or being deflated. And certainly recently, it's all been inflation. The Federal Reserve has inflated the supply of money. And if the money supply has been inflated by 40%, well, 40% is the inflation rate. It is the rate at which the money supply has expanded. Now, what a lot of consumers are concerned with is, well, how does that affect my cost of living? How does that affect prices, right? And inflation does have an effect on prices, although it's not always to raise prices. Sometimes inflation can prevent prices from declining, in which case the added cost, which is a consequence of inflation, is not just how much prices went up, but how much they otherwise would have gone down absent that inflation. And of course, a falling cost of living is a good thing. I mean, Americans, everybody, not just Americans, wants to be able to buy more stuff for less money. In fact, it's prices going down that enables you to buy more things because people don't have an unlimited amount of money. And so as the cost of goods goes down, they can buy more stuff. And so that's, a good thing and contributes to a rise in living standards. So, but yeah, I mean, I don't think prices were going to fall anywhere close to 40% absent that inflation. And I think the reason for that is a lot of the money that we print, as is always the case, ends up getting exported. If you look at our trade deficits, they surged to record territory, especially in goods, where we had all-time record high trade deficits. So a lot of that money got exported, and it wasn't here in the U.S. where it would have been used to bid up the price of goods and services. And so a lot of the money wasn't necessarily spent because, people were locked up. They couldn't travel. They weren't going out to restaurants. So maybe they took some of that money and they bought stocks on Robinhood, or maybe some of them bought cryptocurrencies. So some of the inflation went there and helped lift up those prices. So it didn't necessarily go to the supermarket if it was going into the stock market. So inflation can work its way into the economy through various methods. And so prices can be affected in different ways. But ultimately, it's consumer prices that are where all the inflation ends up once it, finishes making its way through the economy, because that's really all everybody wants. I mean, people don't buy stocks because they want to own stocks. They buy stocks because they think they'll be able to buy more consumer goods with the profits from their stocks. But ultimately, those profits have to be realized, and then they have to be spent on consumer goods, and the price of those goods can go up. Especially, if you look at what's been happening during the COVID period, we've been producing less stuff. I mean, a lot of people aren't working, and if they're not on the job, they're not being productive. They're not helping to produce goods. They're not helping to provide services. So the supply of a lot of goods and services is not going to be where it otherwise would have been, but we have all this demand from people who want to buy. And I ultimately think we're going to see a real shock in terms of how high consumer prices are going to rise.
So you think that's how it's going to end up with all this money printing? It's eventually going to hit consumer prices, or? Well,
it always does. I mean, that's like the final resting place for inflation is in the end product, which is in consumer goods. But, when it's moving through the asset markets, people aren't as upset, when their stock portfolios go up or their real estate goes up. Of course, if you don't own a home and you're wanting to buy one, the fact that the prices have gone way up, that's a big problem.
Yeah, that's a big problem in China right now. Home prices going up too high. So when you give government power, they usually don't like to give it back. So do you think there's ever going to be a time where they're going to slow down the money printer, or is it just going to continue forever?
Well, they can't do it forever because at some point the money has no value. And, there's not much sense in printing money that buys nothing. So at some point they're going to have to turn off the presses. And in fact, hopefully at some point, they're going to slow them down quite a bit. But, we'll see how long they can resist doing that, because doing it involves a lot of pain, short-term pain, economically, politically, that our leaders really don't want. And of course, if you look at all of the promises that they've made to the voters that can't possibly be paid for, rather than admit that none of this is affordable, they can just print the money and act as if, the government can provide these things. So, given the type of leaders we have and their philosophy and the base, there's a good chance that they're going to push this as far as they can. I mean, until the dollar has completely collapsed, and then they just can't get away with it anymore.
Yeah, so you think there's a good chance that they're just going to continue until the dollar collapses, and they're not going to try to stop it before it happens?
Right. It's the dollar crash that kind of brings the problem to a head and turns it into a crisis. So before that happens, there's really no incentive for anybody to change.
Yeah.
Because as long as they can print money and people will accept it and the value doesn't go down too much, well, they'll just keep doing it, rather than being honest with the public and accepting the consequences.
So what does a dollar crash look like to the everyday person? Because, we hear that term thrown around every now and then, but at least for me, it doesn't really click. Like, what is the effect of that? What does that look like at the ground?
Well, the dollar is what you have to trade to buy goods and services. I mean, we're not, bartering. People aren't just, providing, exchanging what they produce directly for what somebody else produces. You produce something and you get paid dollars for producing. And now when you want to buy stuff, that other people produced, well, you give them some of the dollars you earned. And if they want to buy the stuff that you helped produce, well, they pay with the dollars that they earn. So if the dollar loses value, then all the dollars that we've saved buy a lot less, and all the dollars that we're earning buy a lot less. Now, of course, we can try to adjust, because if the dollar really crashes, and you have a job, you can go to your boss and say, hey, you got to give me a raise. I'm not going to keep working and giving you all this labor, for the same amount of dollars that you were giving me before, because I can't hardly buy anything. You need to double my salary or triple my salary, because otherwise I'm, no point in working. And so, and your employer may be able to do that to the extent that he can go to all of his customers and say, hey, yeah, I got to double my prices or triple my prices, because, the dollar's crashed. It's not worth what it used to be worth. So for people that have current income, there may be some ability to recapture the lost value of the dollar by adjusting your earnings so that you're earning more dollars. But for the money you've already saved, right? People that have set aside money that they earned in the past, that supply of money is fixed, especially if it's, in bonds or in a pension or some type of fixed income where, you're just getting a set amount of money on a weekly or monthly basis. And that's what you have. And that doesn't change. And so if inflation, causes prices to double or triple or quadruple, but you're just getting the same amount of dollars, well, you can't buy the same amount of stuff. Maybe you can only buy a quarter of what you used to be able to buy. And that is a huge loss. I mean, that's like losing 75% of your money. I mean, even though you still have your money, it only has 25% of its buying power. So there's real losses that a lot of Americans are going to suffer as a result of the dollar's decline.